Hey everyone, welcome back to Finpod, your daily financial digest. I am your host Evan, here to wrap up the market action. Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's get right into it. NBIS Group is the talk of the town today. The stock surged over 15% after a massive earnings beat, with the company reporting a revenue jump of nearly 700% year over year. Beyond the numbers, they secured a huge power deal in Pennsylvania and announced that the team behind Clarify is joining them to spearhead AI research, which has investors feeling very bullish about their infrastructure scale. Meanwhile, MRVL technology is seeing double-digit gains today. This move is fueled by multiple analyst upgrades, including a significant price target hike from Bank of America as the market reprices the company's role in the AI networking and custom silicon space. We also saw a surprise stake disclosure from AMD, which really solidified confidence in their growth path. And finally, Alibaba is catching a bid, jumping over 8%. While their earnings were technically a mixed bag, the market is laser-focused on their 38% surge in cloud and AI revenue. Sentiment is also getting a lift from the high-profile meetings in Beijing between US and Chinese leaders, which is easing some of that geopolitical anxiety that has been hanging over Chinese stocks. It was a resilient session for the major indexes. The S&P 500 and the Nasdaq managed to push to fresh all-time highs, shaking off persistent macro headwinds and some hotter-than-expected inflation data. The Dow lagged slightly, but still finished in positive territory. The real driver today was tech optimism. Investors are clearly leaning back into the AI trade, and the positive optics coming out of the summit in China provided a nice tailwind for global sentiment. Breadth was generally constructive, with investors rotating back into growth-oriented names after the recent sell-off. In the AI economy, the focus remains on infrastructure. We are seeing continued momentum in AI-native cloud and data center expansion. The big story today is how companies are moving from just talking about AI to building the physical and software foundations. We have seen significant partnerships and capital deployments, with massive investments into data centers and specialized silicon. It is a clear signal that the race for AI compute capacity is still accelerating, not slowing down. Turning to other stocks in focus, Dynatrace had a rough day, dropping over 11%. Even though they actually beat on earnings and revenue, the market seemed to react negatively to their forward-looking growth prospects, with investors clearly sensitive to any signs of slowing momentum in the observability space. On the flip side, Tower Semiconductor saw an impressive jump of over 22%. Their earnings report was a standout, with the company guiding for record revenue in the next quarter and highlighting strong demand for their specialty foundry services, particularly in silicon photonics for AI. To wrap up the earnings front, Cisco Systems was the major headline after the close. They crushed expectations, reporting 12% revenue growth and raising their full-year guidance significantly. Their move to restructure and redirect spending toward AI and security is clearly resonating with investors, and the stock is seeing a nice pop in after-hours trading as the market rewards that strategic pivot. Manulife Financial and Korea Electric Power also reported, but the focus remains squarely on the tech and semiconductor sectors. That is it for today. We covered a lot of ground, from the massive rally in NBIS and MRVL to the resilience of the major indexes and the big earnings moves from Cisco and Dynatrace. If you enjoyed this episode, please like, share, and subscribe to the channel. Leave a comment if there is a specific stock or sector you want me to cover next time. And for those looking for stock recommendations, remember to visit Fintwit.ai. Thanks for listening, and I will see you back here tomorrow.